Good evening. This is Jeff Scott, and this is my top-down review for the weekend of April 24, 25, 2021. I titled it, Is April Setting Up to Go Out with a Bang? And I will fill you in on why that was my concern as we go forward. Again, my name is Jeffrey Scott, and my email address is hgsidoc@gmail.com, and I always welcome positive and negative criticism. If you're watching this on YouTube, a couple of things. Please make sure you have the highest definition possible. I record this in 4K. Lower right-hand corner of your screen, there's a gear. If you click on it with your mouse, you should be able to maximize resolution. Again, if you're watching it on YouTube, click the up thumb or the down thumb. I don't get enough views for me to make this worth my while, to be honest, and one way to perhaps expand that is to get more either remarks down below or thumbs, and then maybe YouTube does some promotions, because sort of stagnant on numbers. I don't do this for money. I don't do this for any reason except to help people. So the more, the better. All right, let's go. As always, it's for education purposes only. Anything I recommend is in the spirit of education, should not be considered investment advice. I am a doctor, not a broker. I'm independent. I am not affiliated with any software company, professional, trader, education, or anything. I do this for fun and for education alone. You assume all the risk. Anything I talk about should be considered just education. And again, you are the one responsible for any investment decisions you make. And the other thing I'd like to point out is that I do talk about options from time to time, and I refer you to the Options Industry Council, where they have some excellent information reviewing with you, frankly, the risk of option trading. I'm not going to go too deep into this, but every week I talk about my influences. I got educated, I've read, I've gone to live meetings, I've bought software, I bought videos, and then I put it all together. I came up with my own trading. Ian Woodward, up in the upper left-hand corner, used to say, become your own guru. I've become my own guru, and I hope through my videos and other things that you do, you can become your own guru. I own a lot of different technology for trading. I rely heavily on TradeStation and Thinkorswim with specific indicator sets. For analysis, HGSI and EdgeRater, the Q tools, Dr. K tools, and the John Person indicators. From time to time, I will introduce you to another tool, sometimes even to a video or webinar by the educator who promotes that tool. I'm never given anything when you buy something. I don't want it. And frankly, whenever somebody offers me some affiliate marketing deal, I tell them to give it to you as a bigger discount. So thus, I truly am an unpaid volunteer, and this is simply education. You know, I'm going to be thinking about adding to this sheet. Started playing with a company product called Wealth Charts. Rob Hoffman, who is another trader, not my kind of trading, much faster trader than I am, came out with a new web-based modern interface product that's actually pretty cool. And they had the Wealth 365 this weekend, and they had an amazing deal on his platform. So I don't even remember what the URL was, but if you can find it, it's worth trying it. Stocks and Commodities reviewed it this week. That's why I ended up downloading it. Looks interesting. I'll let you know more after I use it a while. Here's the website for HGSI, highgrowthstock.com. Again, I have no affiliation. Sometimes I wish I owned it, but in reality, it's a lonely job owning a software company. I do that in medicine. Why do I want to do it in technology? I'm trading. Free 30-day trial gets you access to the program without a credit card. Under Investing Strategy, hundreds and hundreds of movies by Ron Brown, myself, and others. Stock patterns are cyclical. Boy, what a week. We are clearly up here in stage 3. I'm not even saying we're taking off again. We might be, and we might be dropping. It's like we lived in a Darvis box this week. Monday and Tuesday, I got hammered. Now, fortunately, I've been trading long enough that I don't get that upset about one stock or one day, because I always know there's a next day. Then Wednesday and Friday, I had some of the best days of the year. And Thursday, I was really up a ton. And then with the tax law discussions, I ended up losing on the day. So net, I made money on the week, but not a lot. But it was interesting. Since I am saying we're somewhat uncertain right now, and we'll talk about some potential events occurring this week, not real events, potential volatility. I did raise some cash. I took some profits, sold some premium, but I also bought some contra ETFs just in case this market rolls over. I think there's risk of that for a number of reasons. Every time I say that, it goes higher, so take it with a grain of salt. Now, what really shocked me, look at how Friday finished. Everything's green except for defense. Late in the day, both staples and utilities sold off. If the market was concerned about rolling over, wouldn't you expect those to be up? So maybe I'm being overly cautious. Let's take a look at the major markets here. Let's see if I can find the right one. This would be futures. I like looking at the futures. So each of these will be 1 year. Now, one thing you notice, this little low balloon on the S&P 500 futures was the first day of the trading 1 year ago on April 24th. And the balloon up here, which is the high of this year, occurred on Friday, April 20. Well, Friday. It's got to be, is this daily? Yeah, it's daily. Friday's the 23rd. So isn't that amazing? We ended the last year, if the year ended on Friday, at an all-time high, and we started it at the low of the year. So this market has been interesting, lower left, upper right. Clearly, this week was a consolidation week. 1, 2, 3, 4, 5, 6, 7, 8, probably 9 bars, almost 2 weeks, the market has done nothing but go sideways. No shocker, it's doing this at the 160 some retracement, the 162% Fibonacci. Now, it's more a retracement at this point, it's an extension, a place that you might expect some resistance. It is above the 50, the 17, the 50, and the 200-day moving average. It's consolidating. It could go either way as far as I'm concerned. If I had to guess, it probably opens the week up. It's later in the week that I'm worried about. Nasdaq Futures, again, low of the year was set the first day of the last 365. It set the high the Friday a week ago with a doji spinning top, and then this week it sold off on Monday and Tuesday, and then ended the week higher than it closed on Tuesday, but really sideways candles, railroad tracks, I guess you might call them. Again, it's above its moving averages, which is bullish. It's in a person sell signal. Is this going higher or lower? Dow Futures, broken record, although it took a little longer to set the low. The low was set May 14th. Set the high of the year on Tuesday before it sold off. Then it had a buy signal come in on Wednesday and went sideways the rest of the week. They all look the same. They've all had huge runs. They're all consolidated enough over the last couple of weeks that they're not triggering their high jump. They're not in parabolic moves. Big week of news and earnings, I guess, will help determine where this market is going. If I look at the Russell futures, this thing's gone sideways, frankly. You could draw a box going all the way back to early February. Gone nowhere. Of course, it's had some pretty big moves within that box, but you look at where it ended up here, it ended up kind of where the box started. Sideways move, new buy signal on Friday. It's probably most bullish of the bunch in my opinion, based upon that new buy signal, and it's sitting right on the 50, broke above the 50. If we look at the VIX, the VIX got down to that level here. The low of the year occurred earlier in the week, or actually a week ago. And then it had a buy signal on Tuesday. a little bit of a flag, consolidation Wednesday, Thursday, and Friday, but the VIX stirred. Now the VIX is still low, which meant buying options cheaper, and that I did some of that for covering some of my positions. As I mentioned before, I put on a bunch of hedges. I'll give up return to not lose my capital. And the dollar, as you could see, a little bit perhaps of a bear flag, and it broke down. Now, looks weak, but it may be susceptible to market forces. If we look at the weekly charts and news coming up, you could see how extended or how much off the March lows the S&P 500, the Nasdaq, the Dow, all have done well, even the Russell. Be an interesting week, as we'll talk about. Expected moves. Some of the things that, points about expected moves. And, if we think about the S&P 500, it will remain within the expected move 70% of the time. When I'm trading, I'm looking for edges, even a small edge. And if I know that if an index or stock trades down to their lower of the expected move lines, and if 70% of the time that stock is not going to fall further, or it's going to end the week above that line, I probably don't want to be shorting there, and I might want to be looking for reversal candles to buy. Same thing if it runs up to top of the expected move. Again, if 70% of the time it's going to stay there or close within the expected move, I probably don't want to be adding to positions. Now, the reality is that's very true. We can use this as support and resistance, but it can break through. And when it breaks through, you can get some pretty violent moves. So be careful and always look for some confirmation, such as a candlestick. Another good thing about the expected move is it gives you a sense of what the option makers are thinking will be the movement during an earnings report. Now, when I looked at the expected move for this week, what popped out at me? First, I saw this and I said, wow, that's massive. I think this is a mistake. It's 53 plus or minus is what I get. And when I look at the, I'll show you what I look at. When I pull up the SPX, the S&P 500 index, and I look at April 30th, which is close on Friday next week, and I look at a straddle at the money, 41.80, it's $53. That means it's being priced by the option market makers that it could move up or down $53. That straddle is getting you is buying you. Let's show you what that looks like. If you buy a straddle, then you're expecting a move greater than 53 points in either direction. So you don't make money. You don't make money until you've had a 53-point move in the stock price, either 53 below or 53 above. The beauty is, if you get a big move, and this is why people might buy a straddle, if you get a big move, you have unlimited gains if the stock until zero if it goes down, and you've got unlimited gains if it goes up. But the problem with my mind with buying a straddle is you're paying a ton of money, and you have to get a very outsized move for you to break even. So I don't buy a lot of straddles. But this amount basically says that the option makers, think about this. If I sell you a call and a put for $53, That means if it goes up $53, I break even. Anything less than a 53-point move in 1 week, if I sold you that option, I make money. If it goes down $53 during that week, up to 53, I make money. So I don't lose money until there is an outsized move. In fact, if we go back and look at the trade and we're going to sell it, look at this chart. Oh, it's not doing it. Come on, why isn't it doing it? Because I've got a buying a straddle and selling a straddle. So if we're going to, well, it must have, okay, so I'll uncheck this one. Uncheck this one. So here's what happens if you sell the straddle. You get all this money. You collect all this money. All right, $53. But if the stock moves more than $53 one way or the other, you lose money. So you're betting that the stock is going to stay within a 1 or 2 standard deviation move. So all that the expected move is doing, okay, this here is at 38, whatever the current price is, 41.80. Here's a 23-point move. You know, my numbers are not perfect here, but this is the cost of your straddle. But since you're not going to go lower and higher, you have to go the entire price on both sides. This is the price of the put. This was the price of the call. So you have to exceed the combined price to lose money. So it's an interesting trade. I don't do that trade. But what I do, and do sounds like something my kids would laugh at when they were babies. And my little baby is actually preggers, so, but not enough for me to think about yet. Pretty soon I'm going to have a little baby. But anyways, here is the expected move. Again, I think this is double what it's supposed to be. It's wide this week because of what you're going to hear. Notice this week, the S&P traded down below the expected move and finished right up where it opened. Notice this week the Nasdaq traded down on the open, did not really close below the expected move, and traded back close to where it opened. The Dow Futures traded down, did not really extend below the expected move, and traded back up and closed near the center where it opened. The Russell did break through and then had a reversal, closing above where it, well, closed the prior week. The VIX moved up but stayed within the expected move, and the dollar traded down and stayed within the expected move. The expected move really captured on every instrument here, except for 2 days of the Russell, 100% of the move. So on all of these, had you sold a straddle based upon that closing price on Friday, all of these, you would have made money selling the straddle. Selling straddles is probably a great way to make money. It's just not the kind of way that I can sit still and not worry about it. That's my problem. Rates eased this week. You can see the 10-year and 30-year went down. So that means bonds probably went up. AD lines on the large caps, new highs on price and AD line. On the smaller caps, they went up a bit this week, as did the new high, the AD lines, but they're not at new highs. So there's still some divergence there with large caps outperforming small. Breadth stocks above the 200 remain steady, as do stocks above the 40. But from a short-term perspective, we're getting close to overbought again. Doesn't mean we roll over. In fact, a day or two of sideways is enough to work that off. This is going back to the 1993. Every time we hit the top or get close to the top, the market reverses. We're close to the top. So put that in the bearish camp. The McClellan oscillators have not really been our friend for a long time. We get new highs, but not on the oscillator and the index, so both on the daily and on the weeklies, we have clear-cut divergence. If we look at my buckets, remember we're taking all the stocks in the S&P 1500s, we're putting Bollinger Bands on them with a midline. On the right, we're asking the question, what percent of those stocks are above the midline in the Bollinger Bands? 72% is extremely bullish, not overdone. We have about 12% of the stocks above the Bollinger Bands. We can get a lot more extended. So even though the high jump, the 3-month new high, new low is getting stretched, we could still run up before this market sells off. No evidence of a Hindenburg omen this week, and there hasn't been one for months. And the reason is there's just not enough new lows. There are some new lows, but not enough 52-week lows to trigger a Hindi. U.S. markets remain predominantly bullish. Here, mostly green on the Woody indicator. Now on the week, I called it muted action. Why? Because here we're looking at performance versus ERG. ERG being earnings per share rank plus relative strength rank plus group rank. Ranks are 0 to 99, so the best you could really be is about 297. And what does it show here? Really flat performance until you get out to the super high ERGs. But if you start looking, there's like very few stocks there, so I don't even pay attention to that. So really not much move at all this week. And if you look here at the y-axis, you could see that some moves below, some above, but again, very small numbers. EPS rank did not seem to do better by having earnings. In fact, stocks with no earnings outperformed. Relative strength rank remained to be a positive as influencer, but low performance relative strength actually was number 2. Stocks that were distributing the prior week had the best return. This data is data every week in HGSI. I store a copy of the data set. The way I do that is simple. You can do it too. I open up all securities. I hit a warehouse view. Now, one thing to point out, there's 10,467 groups, stocks, individual stocks, ETFs in the product today. Used to be 9,500. I swear the difference is all SPACs. It's amazing how many SPACs. Now I have something, and I don't know if this is from, I think this came from Ron Brown that I changed a little bit, called the archive view. And the archive view is a combination of a filter that says it's not a group index, and then it really doesn't care how I rank them because I'm not using it for ranking. I then loaded on columns to display almost all of the fundamental and technical fields that I wanted. Then all I got to do is file, save as an HTML. And as you can see, I already saved it for this weekend. And that basically dumps this entire worksheet to a file that can be read into Excel and can be read by EdgeRater, which basically gives me a snapshot of the current status of the database, freezing in time. So another thing I like to do in HGSI is what's called the group performance analysis. I do this every weekend. First, I find the S&P 500, and I could see it was down a teeny weeny bit. I can see that my portfolio, and this isn't a really good representation because it doesn't include hedging, options, and position sizing. It just says if I bought $500 or $1,000 positions in each. But I was up a little bit, and here it says I was up 0.34%, 32 to 26 winners to losers. My buy watch was up a little bit better. Interestingly, this week, my filtered buys were actually a little bit worse. If you look at some of the IBD lists, all better than the S&P 500. So growth outperformed, but muted so. the canaries actually underperformed this week. And my canaries are extended FANG. If you haven't seen them before, I should say Ian's canaries. And leaders, pocket pivots, strong technicals, best stocks under 15, momentum, Woodward Brown best of, Ian point score. A lot of the very bullish groups led on the week. Sectors. We've got some weakness here in energy and I believe staples. Certainly isn't financials after Friday. Now, speaking of sectors, this is based upon the S&P 500. The spider sector groups are S&P 500. This comes out of Q Edge. Why don't we lose the real deal? So let's call up Q Edge and let me take it back to the home and show you how I use the Q Edge in top-down trading, and I use it a lot during the day. So this is updated through right now. Where it says one day, this is Friday. So if on Monday morning, this bar will now set will go to current day, but the market wasn't open today. So this tells me here that on Friday, 91% of the sectors were up, 89% of the industry groups, and 83% of the stocks. Clearly, Friday was a very, very strong day. In fact, on Friday, we had 10 industry groups, or sectors up, and 1 down. The only sector being down, as I mentioned, defensive was negative was negative on Friday. You can see utilities were down, and staples in the S&P 1500 were still up, even though XLP, many of those looked red on my sector review. Clearly, those were the weak parts on Friday. Now, here's Friday, sector, industry, stock. I can look back at 5 days and see it was a 50-50 week with a little bit more positive than negative. So clearly, over the last 1 and 2 days of the week, it improved. If you think about Monday and Tuesday were the worst. If we go back over 2 weeks and a month, we can see strength there. So this was actually a weaker week, although it finished in our favor. Here are the buckets real time. D2 would have been Thursday. D1 is Friday. And, you know, I pay attention to these lines here because these are my over on top of the Bollinger Bands and at the top of the Bollinger Bands. And this is real time in the S&P 1500. Sager put this in for me. I love it. I thank him so much for doing that. Now we can look at 5-day sector performance, and we can see over 5 days in red, we had minus on utilities, minus on materials, minus on energy, minus on staples. 1, 2, and I guess over 5 days, we were minus on financials, just a teeny bit. But if we look out at 10 days in a month, you can see the sectors are much stronger. All right, so let's look at Friday. Let's rank these, and we could see the top ones here were financials, materials, information technology. So this tells me performance over a year. Energy's been the best over the year, but you can see energy goes up and down, and right now energy is in the middle. Not bad. Utilities, staples, weak. Healthcare and real estate, which are also somewhat defensive, bring up the bottom. Healthcare to me is defensive because, hey, I'm a doc. It's recession proof. At least it has been in my lifetime. So I like to take the top 2 and highlight them. And you can see there, financials and materials. And if I hit these gears, I'm going to bring up the industry groups in financials and materials. Always making sure I've got the right date, which I do. So this are the industry groups within financials and materials. Overall, I've got 147 groups is the way that Sager set this up. And if you look at it, leading are forest products. You know, lumber is expensive. When my son today say, hey, Dad, you know the futures on on lumber are out of control? Yes, Justin. They've been leading as a sector, forest products, on the entire year. Copper, Southern Copper, Freeport-McMoRan, maybe a little bit TECK, regional banks, steel, diversified chemicals, investment banking, and thrifts. Let's look at, we want to buy the best of the best. 1, 2, 3, 4, 5. Let's take the top 5 groups. And if you think about it, there's 147 groups. We got the best one, the second best one, the fourth best one, the sixth best one, and the 9th or 10th best group right now are in this review. Now I'm going to click on this magnifying glass. Remember, I'm doing this intraday as often as I want because it's real-time data being fed by Metastock Icon. Here are the list of the stocks in the S&P 1500 that make up these industry groups. Now, I'm going to go right, I'm bullish, I'm going to go right to these 3 stars. In hockey, you get 3 stars are the best players of the game. In Sagerland, those are undervalued stocks with good earnings per share growth. So you can look at the current quarter earnings per share are just out of this world. And then the light blue means we're undervalued. So something like Cubist, or I don't even know what CUBI is. That looks interesting to me. So what I could do is I could highlight this, click there, and I can pull up my TradeStation and go into my Q tools, and it'll paste there. And I can look at it, and what do I see? I see something that looks interesting. I'd rather this not be magenta because that's a bearish candle color. I'd rather it be blue or green, but what a bullish configuration. So sideways move, a hammer, huge bottoming tail, and then on the daily we pulled back to support and we broke out here. We know from my HGSI indicators that that also has a squeeze. This one looks interesting. Now, one of the issues, big word, with using QEdge is I'm limited myself to the S&P 1500. But I could take this, again, make sure it's still here, I'm going to copy it, and I can open up another one of his programs called Vital. And I could go to Vital, and I could punch in, I already did this to save time, QB, and what it does, it tells me it's called Customers Bancorp, okay. And then it shows me all the different peers it has, and I've chose Industry Plus. I could look at just in the industry, or even more extended. I like Industry Plus. Minimum market cap of 50 million, at least $1. It's a regional bank. Here it gives me some of the fundamentals. Here's showing me that it's undervalued, squeeze potential. Every one of the earnings columns is green. 114% this quarter, 87% last quarter, 63% 2 quarters ago. EPS growth, 3 years, 25%, 1 year, 80%. This thing is a monster. All right, so I'm interested in it. Now, this has given me much more extended than the S&P 1500. And if I click this here, I get all the fundamentals on these different regional banks. And again, I could do the same 3 stars, and it pulls up KeyBank, which I believe is one I liked as well. So why did I just show you that? I don't get anything if you buy it. I certainly don't get anything if you buy Metastock, which is the problem. You need their data feed. But I don't know of any other program that so nicely allows you to do on a real-time basis a top-down review during market hours. So now I probably have some people sending an email to Ron or George saying, Is Jeffrey telling us we don't need HGSI? Absolutely not. That is not what I'm telling you. There is no charting in Q Edge or Q Vital. It is expensive, probably to get all in over $2,000 for real time on a yearly basis. That's not the typical HGSI user. It has none of our fancy indicators in Metastock that we use, that I use. And it's not, aftermarket, HGSI is so much faster running around. So this is complementary. Thought I'd show you how I use it, though, while I was doing this. Canaries popped last week or the week before, sort of a little bit of a bull flag here. It's not over here. They've regained their moving averages. Canaries will go the way the market goes. Here's my concern. Is there a black swan event ahead? I am not by any means telling you that the market is in trouble. I would have no idea. In fact, anybody who on Monday or Sunday tells you they know where the market's going to be on Friday is a liar. We can guess. We can put the odds. We can try and get an edge. There's a lot that's going to happen between now and the market open on Thursday, frankly, Friday. Look at the earnings to come out on Wednesday. Boeing, the big impact in the Dow. What's the impact of the Maxes going to be? Shopify, a darling during COVID. Its stock has sold off some. Humana, some healthcare data. Oh yeah, after the close on Wednesday, let's take a bite out of Apple. I can't wait to get the new iPad Pro. I priced one out. It's $2,400 with the Apple Care for a frickin' iPad. I bet I'm not the only one. You're buying it with an M1 chip. How exciting. Facebook, Qualcomm, Ford Motor Company, eBay, ServiceNow. Thursday morning, Caterpillar, Merck, McDonald's, Bristol Myers Squibb, Thermo Scientific Fisher. After close, the one that I have to be worried about, or not really, I put hedges on Amazon. Maybe hear something about NIO that started moving, the electric cars were moving. All right, so we got huge earnings all week, especially on Wednesday and Thursday. On Wednesday, Federal Reserve announcement at 2 p.m. Chairman Powell at 2:30. The Canadian Fed equivalent has started talking about tapering. Those that have been around the markets know there was the taper tantrum when Janet started talking about tapering. Everybody in the world expects Jerome Powell to say, we expect inflation to be transitory and we're staying the course. What if he doesn't? Wednesday night, President Biden. Does anybody believe it was a coincidence? I'm not political, this isn't political, but it was a coincidence that it leaked last week, a week before the State of the Union address, that he wants to raise taxes. He didn't talk about wealth taxes yet, that's probably coming, or the estate tax, we know that's coming, and the exemptions. But clearly, you can't pay for all this without raising revenue. Then again, if you're green, the new energy deal like things, like solar, maybe it's going to be a great day come Friday, or Thursday rather. Then on Thursday, we're going to get first quarter GDP. There is so many opportunities for this market to blow up. Since I'm telling you this, it probably means it's going higher. So I've given you a lot. Know your news and your earnings. Tesla on Tuesday, not exactly minimal to worry about or think about as well. You got some big energy. What a week. This is my quote. I've had this here for a decade. It's a judgment call to hold stocks over earnings dates. It is bad judgment to not know when your stock's earnings date is scheduled. Oh yeah, I forgot this one too, Alphabet. I mean, how many big stocks, Microsoft, AMD, are we going to see this week? So S&P advanced 1.1 on Friday and recouped all of Thursdays, and I cannot spell, can I? I hate that. I just have to fix it. Hold on a second. I do not like spelling mistakes. And I make a lot of them. And it's really embarrassing when I have one on a presentation that I am doing at work. Done that too. Let's see, swap. So I'll paste. S&P was 1.1, Russell 1.8, Nasdaq 1.4, Dow 0.7. It was a great day on Thursday. On the whole week, though, stock market finished mixed. Russell was the only thing up. Everything up was down fractions. True to recent usual form, investors bought the dip on Friday because of optimism about negotiations could block some of the things that caused the market to sell off on Thursday. This will be an interesting week. J&J's vaccine was cleared after hours on Friday. While COVID's getting worse, I have offices in India, and it's a mess. Earnings will, again, set the stage. Then you got Powell, you got President Biden, and you got GDP. I think it's time to fasten our seatbelts. And then we enter the last week of April this week, and then we have to start wondering, are people just going to start taking profits and selling because sell in May? Or will the buoyant economy and accommodating Fed and improvement in COVID-related issues overall lead to additional market strength? For me, last week was interesting with wide swings down early in the week and up at the end. Tax-related sell-off at the end of the day on Thursday ruined a very strong day for me. I ended up minimally positive on the week. I still up about 50% on my starting funds, of which I took out 60% to use on one of my houses. I am still quite long, but with Amazon, Facebook, Google, Microsoft, Apple, all positions I own on tap. And the news risk, I lightened up on Friday. I bought contra ETFs as hedges. I have puts on many of my major positions. I suspect this is not a week for those with weak hearts. You can see performance to the year. I'm up handily versus the averages. The Russell is outperforming. All right, I spent a lot of time there because I think this is a week where it's more than just an individual stock. Very quickly, let's look at what the indexes are doing. If I look at the E-mini, a new person buy signal came in on Friday. That's bullish. It's on a weekly and a monthly buy. There's still some of these red dots, which are MACD divergences occurring on the weekly, but they can go for a long time. Blue is an indeterminate, buy, sell, or hold, do whatever you want. A green bar is bullish, buy or hold. A red bar is bearish. Interestingly, we're still in Laguerre sell. We are at the top of the envelope, so we're getting a buy signal at a high on the E-minis. We are at 85% on the high jump. There's not much more of a move before this thing's going to get extended, but it's not to say we can't have a couple more days up before we start to reconsider that high jump. Dow Futures, interestingly, still in a sell signal, although other than that, it looks a lot like the S&P 500 futures, and it's at 79.9 on the high jump. The Russell futures, a new buy signal and green on Friday. Like I said, probably the strongest right now, looking at them. Weekly, monthly buy, only at 43% on the high jump. They have more room to run. The Nasdaq futures, still in a sell as well on both the Laguerre and on the person signal, high jump at 46. So we've got some bulls and some bears on the major indexes. Now let's go look in HGSI. And you're probably wondering, if you're new, why does he talk so much about the market? Because I'm a top-down guy. And if the market sells off 500 points this week in the S&P, I don't care what stocks you own, unless they're contras or maybe gold, or if you're going down. It's the market. It's the market. it's the market. So start with the Market Plus top-down view, and we could see that on this week, where most of the weight is 1 day, a little bit of the weight is 5 days. Make sure we're ranking by raw combo. Mid caps and small caps, transports, Nasdaq, NYSE, and Russell, and the IBD 50. Clearly growth led, but the returns on the week in this column are very muted. Let's take a look at the S&P 500 to start, and we'll go quickly through the various indexes. And one of the guys I follow, his name's J.C. Parrott, All-Star Charts, he calls this a messy market. He says it's not bearish, it's not correction, it's just messy. Certainly was a lot messier Monday and Tuesday. You can look here, big sell-off in the Dow back over a year ago. Here's the 161.8% retracement. And we did the same thing at the 150% retracement, where we stalled out for several days. And I thought that that might have been the end. And then the market just kept on going. New buy signal came in. You're in a weekly, bongo, green. Except for the fact it's been a long time, the high jump's not maxed. It could certainly go higher. Eventually it's going to stop going higher. Will this be the week? I don't know. How can you not say that's bullish? Dow Jones Industrial, same exact thing. Pausing to refresh on the 17-day. There's nothing bearish about this, except it's run a long time, but it's not at the high jump. If I look at the Russell 2000, we'll look at the IWM ETF. Pull back in a squeeze, 2 kahunas in the last 3 days with a person buy. For those that know me, how is that not a bullish looking chart? I think it is. That's why I said before, I thought the Russell was the strength of this market. And then let's look at the Nasdaq Composite. Just like the others, pausing, new buy signal, at least the buy signal here on HGSI. You might notice between Thinkorswim, TradeStation, HGSI, and Trade Navigator from Genesis financial software that there's some small variation in the formula based upon the language that each of them uses. So you can be off a day at a time. Also notice, and I should point this out, I know my buddy Kathy, my neighbor, called me up all excited because we had a Eureka. I think she takes me too literal because while I've been in the market for a little bit longer, she was waiting for the Eurekas. We had Eurekas back here in March. Of course, we did have a couple of Hindenburg's fire, and that's concerning. But we got more Eurekas flew this week on Wednesday, which was music to the bulls, and was a good time to start dipping your toe with the asterisk of what we got coming up at the end of this week and then next month. So NASDAQ looks fine. Now, within the NASDAQ, I always like to look at biotech. I started nibbling LABU because of my career. I do have non-disclosures with a number of biotech, so I don't include no trading. So what I do when I think it's time to go buy biotech, I buy LABU. We hit 1, 2, 3 times on the 200-day moving average. We took out the 50. We failed at the chandelier for a couple of days. We took the chandelier out. We had a mobile breakout from the squeeze on Thursday, pocket pivots, kahuna on the Eureka day. I think this is a reasonable time to start nibbling biotech. It was even more reasonable a week ago. Semiconductors, which have been the darling of this market, sort of have cooled off some. Pulled back to the 50 and held. Maybe it's a good time to think about semiconductors after they've given back some. What else I want to show you? IBD 50, which probably reflects a lot of your portfolios because most of the people that follow me are IBDers like I am. And you could see broke above the 50, mobile breakout from a squeeze, a person buy, and 2 kahunas in the last 3 days. Looks a lot like the Russell, doesn't it? I think that's bullish for my type of trading, which is probably your type of trading. Now, speaking of type of trading, Kathy Wood, notice how she's gone sideways underneath the 50, but maybe she's setting up as well. Autonomous tech and robots, fintech, genomic, innovation, Israel, next generation internet, all of them look the same. And then Bitcoin fell off pretty hard this week. Now, one thing about Bitcoin, my son is a much better Bitcoiner than I am. I don't do much Bitcoin, but I play MicroStrategy, Riot Bitcoin, Mara Patent Group, because each of those trade along with Bitcoin because they're miners. So I got out of all of them. They've all gotten hammered. And one of the things I like to look for are stocks that give me a green candle low at the low jump. And I'll probably regret this, but let me just show you what I'm talking about. MARA, just like Bitcoin, sold off. Pull back to the 100-day moving average. I've got a green candle low, and I can tell you, although it doesn't show it here, it triggered the low jump on one of the programs that I use on the Genesis program. And the same thing with Riot. Pull back here to the 100 with a green candle low. It'd be interesting to see if they follow Bitcoin up. I just wanted to look real quickly at a dollar. Hopefully I didn't mess myself up here. Of course I did. Dollar broke down, continues to drop. Any hint that the Fed is going to start tightening, the dollar is going up. The VIX is popped a little bit this week. Hard to see it on this. I'm not going to look at it. Gold, despite weak dollar, really didn't do that much. 1, 2, 3, 4, 5. It really is consolidating down here below the 200. Silver, see if I can find it. You're probably looking at it, so it's right in front of you. Silver looks a little bit better, consolidating above the 50. I played Barracks the last couple of weeks. It's done a little bit, but not much. And so gold miners, I guess I could just type in GDX, had a nice run, and they've basically stalled as well. So I've now hopefully haven't lost everybody. I apologize for how long this has taken, but I think this is about market, market, market. The next thing I like to do is go into F7, warehouse view. I've got 147 industry groups. I go to 2-day up, and what comes to the top, these are the groups I'm going to look at. I've got 91 to the upside. I've got one group, generic farmer, to the downside. Extremely bullish. Why look at bearish plays? If I highlight and right click it, left click change index group, the only stock in consumer electronics that did better than its industry group is Microvision. And this is one of these day trading story stocks. Doesn't make any money. It's not the kind of stock that I typically play, although sometimes it's play it for sport. It's got 2 kahunas, person buy signal, mobile breakout for the squeeze, and Bible gap up. So it's got all kinds of interesting positive signals, but it's too darn loose for me to figure out what to do with it. Flipping down, Roku, come off its highs, struggling below the 50. I'm not interested. Vuzix, again, I love the uptrend and pull back to the 50. And I'd probably look for some momentum to come in, but boy, that's too loose. Loose all over the place. Coppin, same story. So I'm going to go on to the next group. E-commerce discretionary. The NFT company, TKAT. Again, I don't understand them. It's kind of like Bitcoin to me. I don't know what to do with them. This is the typical pattern where the volume goes crazy. We had 38, 39 million shares on a stock that trades 5 a day. I do play the bounces. It pulled back to the 50 and it's taking off again. I may look at this. I still don't understand enough about these NFTs. I guess I'm showing my age. Amazon. Boy, do I want Amazon to break out and go. That's my biggest position, although it's fully hedged. It's been in a trading range. It is at the top of that trading range with earnings this week. A breakout above, I bet it goes to 4,000. If the market gets soft, it goes down to 3,000. Yeah, what can I say? I wouldn't be rushing out to buy it, but it might run up into earnings. Pindalu's broken. VIPS is a stock. This is tight. Notice how very small daily ranges. I love tight. It sold off hard with the Archipelago or whatever it's called, Archigo hedge fund. It looks interesting to me. It's pulled back. It's got to get above its chandelier, coming out of a squeeze, person buy signal in a kahuna. Alibaba, not yet. Mercado Libre, big up move, not quite as tight, so medium tightness. Sold off to the 200, breaking above the 50. Mobile breakout, person buy. Looks very interesting. Earnings are a week away. I passed. JD.com, not yet. Etsy, proud Etsy. At one point, it was a really tight stock. Now it's a really loose stock, and it's hard for me to buy loose stocks. I still have a remaining position that I bought a long time ago, but I'm losing patience. All right. So I usually go through the top 10. Renewable energy, I think this is one place where it's at. Plug Power, this pattern here, and you may remember I like to show you this slide over and over again. Bear with me a second. People probably wonder why I continue to show this slide over and over again, because everything does this, whether it's in tick time frames, minute, daily, weekly, hourly. Give enough time, every stock I've ever followed, future, does that. Well, so did Plug Power. And is it getting ready to go again? It's sitting on the 200. 28 million shares. Boy, this stock has a lot of volume. That's all I can say. If we go down the list, DQ, I talked about it the last week. What a great opportunity to buy. 2 kahunas in a row. Mobile breakup from a squeeze. Took out the 50. I still like it here. Look at the earnings per share growth. Fusel looks a lot like Plug. Enphase snuck up above it. It's got to get above its chandelier stop, but it looks approachable. Sunrun, Solar Edge, Ballard Power. I think the best is DQ or just by the ETF TAN. Semiconductor devices, they have been certainly have been leaders over the year. AMD looks interesting here. AMD is in a tight range, sitting on its major moving averages in a squeeze. And I guess, let me just make this, when you kind of got a bit of a triangle, and is it breaking out of the wedge of the apex of that triangle? Maybe it is. Buy signal here. I wouldn't give it much range, and its earnings are out this week as well. That's a problem. NVIDIA, Skyworks. There are a couple that I liked. We'll look at them later. Internet media, number 5. I'm not a Snapchat person, but it looks kind of interesting here, sitting on the 50. Its earnings are already out, apparently. Google, I said it looked good here, and it popped. It looks good here again. I would have rather bought it off the 50 than off of the 17. Earnings are out the 27th. That would tell me caution is warranted. I own some. I'm holding it into earnings, I think. Facebook, earnings also this week, seems to be pulling back some. Less exciting there. Baidu is another one of these Archipelago stocks that blew up, or whatever it's called. I apologize if I'm bastardizing the name. You're bottom fishing here, but a mobile breakout from the squeeze doesn't look too bad to me. Automobiles, lots of earnings this week. NIO is pulled down to a obvious buy point down to the 50. Person buy signals, kahunas, pocket pivots, mobile breakout from a squeeze. Earnings are out this week. Tesla, earnings are out this week. A leader in this space. Ford Motor Company, earnings are out this week. I'm a broken record. This is a big earnings week. Electrical, I'm not a GE fan, so I just skip it, which is probably bad, but that's what I do. Blink, it's got a buy signal came in. I don't know about this company. It's an infrastructure play. Look at how under demand it is, though. Maybe I'm the fool. And Generac, I've been in and out of this stock. Time to go back in. Mobile breakout from the squeeze, sitting on the 50. Kahuna, no problem with the pocket pivot. And earnings look like, well, earnings are coming. That's the only reason not to jump on it. Biotech, I said I'm interested. I showed you LABU. Moderna got some good news over the weekend talking about its future beyond COVID. I still get worried about a biotech stock with one product that's a $70 billion market cap. That said, it probably goes higher. Cellsci had news. Zai Labs was news. I didn't really love many of the biotechs. Application software. Yeah, I'm an idiot. I held on to my C, and I'm being rewarded for it. I've been in the C since it's been $35. And eventually I got to sell it. I'll be penalized because of the higher capital gains tax. But you don't pay taxes unless you make money. So it is what it is. Interesting place to buy, breaking out off the 50. Probably will consider adding to my position. Hubspot, this one I bought back here a couple of weeks ago when it took out the 50. And it's breaking out. A new target came out in the mid sixes. It's not based upon its earnings, but it's got great sales growth, and I'm in HubSpot. Zoom is an out of favor stock. It looks pretty good as far as basing down here with a kahuna mobile breakout from the squeeze, but I'm probably not playing Zoom. Its earnings are out not till June. So the 10th group, communication equipment. Apple earnings out this week is enough said. So I go through the top 10 every week. Notice in the top 10 groups this week, we saw Facebook, we saw Amazon, we saw Apple. We would have seen Microsoft if I'd gone down far enough. We saw Google. About the only one that we didn't see, let's just look very quickly at Microsoft. Looks fine to me. Kind of looks just like Google, doesn't it? With a new buy signal. And then Netflix, which disappointed on earnings. And if you remember, I looked at Netflix earnings and I said no edge, not playing it. I didn't play it. Sold all the way back down to the 50 or 200. Those are the top 10 groups. I'm running out of steam. Let me go look at my buy watch list. I found a lot of stocks that looked interesting. Now, again, I start with a lot of different groups. I ended up reviewing the charts today on this many stocks, 1,150. I have a very strict criteria that I follow. 62 made it to my let's pay attention to them on Monday list. I didn't say my buy list on Monday. I said let's pay attention to, or a buy watch list. Now, I'll do some things with this buy watch list. One thing I'll do is I'll go into Thinkorswim under Market Watch. This is last week's buy watch list. I'll come over here and I'm going to do an import, select file, transfer, find my buy watch from today and import it. So now I've got all the stocks in my buy watch, and then here I've got a number of my indicators that either I built myself. My buddy Bob Meager put together for me, Dr. K's, and I'm able to watch the stocks and see how they're performing. I can do that in Thinkorswim or exquisitely in TradeStation, even better than Thinkorswim. I can drop it into, sorry about that, I hit the wrong button. I can drop it into my sonar, and I can run a number of indicators against it, looking for various signals. So back to my list here. Let's go to the stock thing here, and let's look at industry groups. The thing that I didn't hit yet as an industry group, because it just didn't make the top 10, and let's go back and look. Well, I don't want to do that, so I'll have to start over. Regional banks, which we looked at before, carry, which is what came out of the Q tool. Here is the ETF for regional banks. Uptrend, pull back to the 50, kahuna, pocket pivots, person buy signal, mobile breakout from the squeeze, and any move up on Friday takes out the PSAR dot and the 200-day moving average. I love it. I love it. I love it. So, turns out there's a bunch of them that look good. I'll put a few up here. Bank of Ozarks. Same pattern. Getting ready to break out. Fifth Third. First Bancorp. Hope Bancorp. Investors Bancorp. KeyCorp. PacWest. Sterling. Synovius. Umpqua. Western Alliance has already broken out. And then from Q. And this one didn't make my list despite it showing up on Q because I didn't like its 50-day average volume. I think you probably need to be in a regional bank or the ETF. Semiconductor devices, I showed you AMD. Max Linear, Qorvo looked good. Xilinx looked interesting as well. Maybe more of a pullback than I'd like to see, but there's a pattern in here, I guess, if I was a pattern kind of a guy. And we just broke out the top on Friday. And we've gone sideways and our relative strength has improved. I don't like the weekly bongo being red. I do like the mobile breakout from the squeeze, a person buy signal, and a kahuna. So I think Xilinx looks interesting. Steel the one. In retail, Lululemon. It's already got earnings out. In fact, it didn't do well on earnings. Looks like it's ready to run. What else? You can always pause it if you want to take a look at this or any of these names are interesting to you. Another renewable energy play is this TPI Composites rather. It's loose. All right, that's a problem. It's maybe medium to loose, but it's breaking out above the 50, mobile breakup from a squeeze, a person buy, and a kahuna, the things that I like to look at. A lot of stocks are interesting. If you want to be in healthcare, and one way to play, get a biotech that acts like a big pharma is AbbVie. It's been basing here. It's breaking out now. Unlike most of biotech, it has earnings. It has growing sales. And it pays a 4.5% dividend. So on that note, it's been an hour and 10 minutes and I'm tired. Maybe I shouldn't do these at 11 o'clock at night. But anyways, it was an interesting week. I think we've got a really interesting week to come. I thank you so much for watching these. I appreciate all the comments I get. Please tell your friends. I do this to help people, not to make money. And have a great week. Put your seatbelts on.